Good morning. This is Josh Hayes with Hedge Plus, and here's the market monitor for Thursday, July 31st. Well, I guess it's welcome to another episode of How Much Will the Bad Outweigh the Good? The good being we have domestic soybean use going through the roof. Crush is continuing to build, even as we have questions about yield with soybeans due to excess rain. So there's some positive there. Unfortunately, that's now being offset by questioning about where's the demand going to come from. It doesn't sound as though China is going to make any purchases anytime soon. It's not fully official, but it's pretty much presumed at this point that there's going to be a 90-day extension with China as far as the tariff hike that would be threatened without a deal. And it also sounds like it's going to require Trump and Xi to meet in person, and that might not take place until as late as November or even at the end of the year. So China's not buying from us yet. They've usually made some purchases by now. Where they really start to make purchases are in the coming months here and towards the end of the year. Maybe there'll be something in time for that. Maybe they'll do that even without a deal, but the market's going to have to see that before it thinks about something other than the massive supply that's coming out of South America and the supply that's going to be coming out of here soon. We also have the setbacks and lack of progress with India and South Korea, and that swings us back to the left side there. And then we have corn used in ethanol production continues to climb. It's outpacing the daily amount needed to meet the USDA projections. So we have all these things on the left side, which are positive. We're expanding our use of corn and soybeans domestically and biofuels and with ethanol. If we only still just had the demand we used to have, well, you'd think we will get that back at some point once these trade deals are finalized. But if, of course, given this is the time of year we have seasonal lows, it isn't the best thing to introduce a lack of, I guess, progress and in good relations with countries such as India and South Korea, which have been great trading partners. So we got to hope that we see progress and deals made with countries that were thought to be a given, but yet we're still not there. It definitely doesn't mean that what's taking place isn't for the best long term. Trump definitely could be trying to make sure, rather than rush to a less than perfect deal, hold firm and get strong deals to help you guys. You got to hope that's the case. I know people are having, they're wavering and having doubts. And I got to admit that I'm having some myself. I have seen deals happen that seem to be great for other sectors and other businesses. We have yet to see the deals that come together that are really positive for farmers. I did just read about 15 minutes ago someone who's been very knowledgeable about trade and what Trump's strategies are, indicate that he is trying, one of the things he's trying to do with India is to get India to buy soybeans as essentially a backup so we're not so dependent on China. But India is trying to protect its farmers, so it's a back and forth. It's a tough negotiation, and we gotta just hope that we come out in a good place. We have the definite growth in the fuel sector for grains, and we just gotta hope we can keep our level of exports for non-fuels. One thing that I always come back to is, when you're seeing it right now, when the countries turn their imports away from the U.S. and they're importing from places like Brazil and Argentina, there's only so much those countries can provide if they're going to meet the demand that they used to have from other countries. So if some countries try to buy more from those places, they only have so much. Yes, they're growing in what they produce each year, but they can only take so much. And you've yet to see, and we'll show this in a moment, prices come down where they typically would be the lowest in places like Brazil. Brazil is still higher in price on both corn and soybeans from the US. And that's no doubt because they're shipping and exporting a lot more than they typically would. And you add the fact they're behind on harvest. But even if they weren't behind on harvest, there's only so much they can give. So if countries that typically buy from the US buy more from them, they can't meet all the countries' demand that they used to. Inevitably, those countries will come back to us. And that's kind of where we're at right now. We're not seeing that quite so much yet, but it's inevitable. As you know, if Brazil stays above us in price, throughout this time period, countries are going to come our way. So that's one of the ways this will balance out. One of the other bearish factors right now is that the U.S. dollar is strengthening. We've enjoyed a weaker dollar for quite a long run here, and it's definitely helped with export volume. But it is starting to strengthen. And this comes at the same time that production estimates continue to climb in South America, and we see yields projected higher here. So it's a lot to overcome. Right now, the Bears are most certainly winning, but I caution that this is a time of year that this typically happens anyway. So it's not a time to think that all is lost and that things won't turn around. Taking a look at grain weather, still nothing of any concern in not just the United States, but worldwide. There's the best way to put it, and I've seen it put this way by a lot of weather outlets, is that there's just nothing critical going on in anywhere in the world in any of these grain growing areas that would spook the markets in any way. There's always small things, but nothing has risen to a level to build in weather premium, and that's why we're slowly drifting down right now. No blocking ridge here in the U.S. It's allowing storms to pass through freely. We're getting cooler temps and rain. I think in the south there might be starting to get a little bit more heat and dryness, but that would be in the very early stages. There is talk of it starting to dry out in August, but we have good soil moisture. And in fact, to be honest, there's places that could use some drying out right now. So nothing of any concern both in the near or long-term forecast for U.S. right now. Canada, eastern prairies are dry for at least the next 7 days. That has been an ongoing problem, but hasn't risen to the level of causing any scare in the market. So most this would impact would be wheat, and we've seen wheat just continue to drift down as well. In Ukraine, they're getting dry. And they also are dealing with a locust plague. Ukraine prices are very elevated. They're in a really bad spot right now, having all kinds of issues with production and just getting their grain out to the world. So not really too much of a threat right now, but not big enough to turn the market. And in Russia, high pressure in the ridge in the west is breaking, and that is going to allow some rain to finally develop where it had been getting a little bit dry. So if anything, a move in the right direction and a positive direction for them. Again, no real weather concerns around the world right now. Taking a look at international cash prices, you see that U.S. and Argentina are offering corn at the exact same price. We've closed the gap on them once again. That's one of the reasons I think you're seeing corn hang a little tough for the last couple days. Corn exports have been strong. The pace is good there. We need that. We need that to help overcome the yields. If we end up with a massive jump in yield, it's almost assuredly going to be a record this year. If it's just an absolute eye-opening number, we end up, say, 185, this is what we need. We need these exports to be strong in the meantime. And thankfully, right now, we're getting that. With soybeans, you can see we're about a $4.50 gap higher than Argentina. That gap last week was around $3, so widened a little bit there. But you can see Brazil still $25 higher than the U.S. with soybeans, and with corn a good $10. And that's no doubt because just heavy demand. countries, let's just say who it is, China for the most part, is bypassing lower prices to avoid buying from the United States. And that doesn't last forever. They're not going to want to do that forever, but it's this state of where we are right now. And then with wheat prices, the U.S. continues to have the lowest price wheat coming out of the U.S. Gulf. The um, the spring red wheat coming out of the U.S. Gulf is the lowest priced, followed by the Black Sea region. That's what's coming out of Ukraine. That's the most competitive. Ukraine is of any crop, but we are still over $10 cheaper. So and you wonder why is that not showing up in our prices? It's just supply is great, and demand with wheat is probably the lowest of the three. The demand just quite isn't there. It's just not a crop that is a threat right now. So that is holding back the markets. But you can see we should continue to have pretty solid exports with wheat going forward. Taking a look at overnight prices, very little activity overnight, very little movement. Corn trading even, soybeans nearly trading even, and wheat up about a penny. The only of these three that we've seen some strength here the last couple of days has been with corn. Soybeans continue to fall off the cliff. Wheat continues to drift down the last couple of days. At least corn has hung tough. To give you an idea, since Tuesday morning when we made our last episode of this monitor, corn is down just 2 in the past 48 hours. Excuse me. Soybeans are down 16 and wheat is down 8. So we will watch to see what happens there. Not much to hang your hat on with soybeans, especially with no end in sight with the negotiations with China right now. Wheat is more of a abundant supply and medium demand type issue, although the United States will probably be one of the lead sellers for the short term with the prices where they're at. And corn, it's just a matter of trying to maintain at least some kind of equilibrium between the fear of a massive crop and continuing to have strong export demand, strong ethanol, so that we can hopefully, not drift too low. Although we still have a good month here to maybe drop a penny or two at a time, so we could still find our way in say 30 days from now, to something like 380. We definitely do think corn is going to continue to drift down, but hopefully not nearly as far or as bad as what we're seeing with soybeans. That's all for today. That's all for this week of the Market Monitor. Tomorrow we'll have the feedlot focus with Jason, emphasis on the livestock, cattle, and hog markets. And we'll talk to you again here next week.